Hi, this is RK, and today we will be talking about goal-based investing. Uh, Mutual fund investors either go to mutual fund advisors or they try to learn about a mutual fund themselves and try to invest. So, if you go to any advisor, then they will start with the goal-based strategy for their clients. But if you are a individual investor who has not gone to an MFA and has not done his research, then you will end up not planning your investments, and you will end up investing into a whole lot of things and cause a mess of a portfolio. So today let us see what will happen if you don't take care of how you plan your investments and what is goal-based investment strategy. So let us begin. So here you are seeing an Excel where I'm just listing out an example of a person. So say a person has started investing in a mutual fund and he selects based on some uh, research he has done, he'll select a Nifty 50 index fund in the beginning. So eventually, what happens is a friend comes in and suggests something else, and he buys some flexi cap fund. Then maybe he adds on a multi cap fund. So remember that at this point of time, he has no clue as to why he is investing. There's no strategy, no planning. So he's just knows that mutual fund sahi hai, and he starts investing and keeps adding things. So then probably he adds Nifty Next 50 index fund. Then somebody says that small cap funds give a good return, so he probably adds one of those, and then he would also be looking at other things which are like comparing with other mutual fund, and so he feels that he has to add more of it. So he keeps adding like this, and then probably mid cap fund. Then nowadays NFOs are hyped up, so a lot of NFOs are coming with new strategies. So probably he'll invest in an NFO and get allocation there. And probably new brands of big brands will also launch their AMCs, and new funds will come out. And out of FOMO, he'll add something there. So this way you can see that normal investor who's clueless about investing and planning will end up with so many of the funds. So now what will happen when you have so many of the funds? Imagine you have to do an SIP with the limited corpus. So where how much will you allocate? So you will be allocating very minimal in each of these funds, and that will not be enough to take advantage of the ups and downs of the market, right? So you will not make much gains in any of this. Also, if you later on have a small corpus as a lump sum to invest during market crash, so where will you allocate that amount to? So you might take a wrong decision and invest it in some fund which might later on not serve the purpose and not give the returns as expected. So these are some of the challenges when you add a lot of funds into your portfolio. And then there are things like tax, exit load, lock-in, and expense ratio. So all these things also come into picture when you try to clean this up and you sell something. So you will be taxed for your gains, and there's exit load which will be charged if you don't plan the exit properly. Then if you have by chance or by mistake invested in something which has a lock-in, then you will not even be able to redeem from that for some time. So during which the lock-in exists. And then there is this expense ratio which varies from fund to fund. So these are some of the challenges that you will face when you are not planning. So now what is goal-based investing? So goal-based investing is something wherein you plan things and you have some things already calculated. So you'll know what your goal is. So goals can be like for the children's education, for your retirement, for a vacation, car, etc. So you will have to list out what your goals are and what will be the current expense of the goal, how much years do you have to reach that goal. So is your goal like just 2 years away or 10 years away? So you can list that down, and then you have to calculate the future cost of that based on some inflation number that you think will be taken into consideration, and you'll calculate the future cost. And then you have to specify the goal type. So that will again be based similar to based on the years to reach the goal. So whether it is a long term or a short term, that way. And finally you will have to assign a priority. So among these goals, which is your highest priority goal and which is the least priority. So let us take an example, a couple of examples, and see how we can do this. So here now you are seeing a screen where I have just taken a couple of examples. So imagine a person who is age 35. So again, all this planning and all has a lot of parameters. So you have to think and understand all this if you are doing this on yourself. Otherwise, my advice would be to contact a mutual fund advisor and distributor, and they will take you through all these things, and they will form a plan for you. Okay, so let us start here. So age 35. So this person has these four goals: kids education, car, retirement, and vacation. And we have put some expenses, the current expenses here, which they think is what they will need if they have to uh, uh, go through this currently. So this is the expense they have given, and they have also mentioned the years. So kids education is 15 years away, car is 4 years away, retirement is 25 years away, and a vacation in next year. And this is the future cost that is calculated. So you can probably use some of the formulas that is available to put an inflation number to it, and based on the number of years and the inflation number, you will get future cost. So calculators are also available, formulas are available, so you can put any of these formulas and calculate. And then the goal type will be obvious. So something which is like within 5 years, so it will be very short or short, and which is far away, that is long or very long. And priority wise also you have to specify. So kids education, if it's very high priority, you have to mention that, and all the other things has to be prioritized. So this way you now have a goal chart. So you know that this is what are the amount which I have to accumulate for reaching these goals. Okay, we'll discuss about where to invest later on. We'll see an example of older person. So here what happens is, if you are an older person, then a younger person who is retiring will have his goals very far away, and a person who is a little older will have his retirement closer. So then the strategy and all, where to invest and all, will take a little change, a deviation, and you have to uh, consider this as well when you're doing your goal-based strategy. Okay, so also we have taken four goals here and three goals here, so there may be many more goals. So if you are planning for many more goals, then you have to be careful, because it also depends upon your finances as to what is your risk appetite, what is your current savings, what are your debt looking like, what is whether your emergency corpus is taken care of, do you have any other expenses, and whether your insurance is taken care of. So based on all this, you'll have to ponder on whether you can take up more goals, and if you have to take up more goals, then how do you course correct, or what do you do to make sure that you can accommodate those goals as well. So a lot of things goes into goal-based strategy. So this is how a user has to, sorry, an investor has to think about when you are investing. So probably if this is not your cup of tea, then you might have to take the help of a mutual fund advisor. So next we'll see where to invest. So this is something which I've kept at the last because there is no single answer to this. So a person who is 35 may have to have time to reach some of their goals, and they can think about things like keeping it into equity mutual fund. But for short terms and all, obviously you will have to keep it in debt fund, and for very short you'll have to keep it in liquid or FDs. So a person who is a little older, so if still a retirement goal is not achieved, then it becomes a short-term goal, and probably debt and hybrid funds would be the way to go. So I will not be able to suggest on where to invest because I am not a mutual fund advisor. So usually the mutual fund advisor will take care of allocating different funds for different goals. So one suggestion would be not to keep too many funds for a single goal. So keep it as minimal as possible, and also a few other things is uh, monitoring and rebalancing. So once you have selected funds based on your goals, keep monitoring it and rebalancing it based on market conditions. Your priority might change. So maybe car is not a priority anymore. Maybe something else has come in. So you have to reshuffle. So you'll have to reassign the funds that you are investing into the new goals and all that. And then a very important point is staying invested. So markets will be going up and down. So you have to stick to your plan, and you should not be changing it once in a while. So that will disrupt your compounding and your plans. So uh, these are a few things which I wanted to mention in this video. Probably there are a lot of more points which comes into picture if we go deep into this subject, and probably that is not something which I want to discuss in this video, but feel free to comment on what you think about this video, and if there is something else that I need to cover, I will surely try to take it up. So thank you for listening, and take care. Thanks.